Well, hello everyone. Welcome to Getting Started with Technical Analysis. My name is Barbara Armstrong. I'm a coach and senior manager with Schwab, and delighted that you guys are all here joining me today. As many of you know, I anticipated being off for the Barb 3.0 project from anywhere from 2 to 6 weeks, and due to a dental emergency, believe it or not, dentistry and major surgeries don't go well together. We had to delay the surgery. So I've probably delayed it until next spring. I haven't talked to my surgeon's office yet until this dental work is complete, but I'm back. So, and today I thought it would be cool to talk about, from a technical analysis perspective, if we are we want to do an income generating strategy and do a stock trade with a target. How might we use technical analysis to determine those targets? And so I've picked a number of different stocks and thought we could look at different ways we can determine targets, because we can use something like Fibonacci's, we can use price patterns, we can use something called ATR, or average true range. We can do a swing trade. There's all kinds of things that we can do. And so that's what we're going to talk about today. So, Cameron May is with us in the chat. He is a fellow coach. He brings a wealth of experience. He's been in this industry for decades. He and I are both on LinkedIn and on X, and I encourage you to follow us in both of those locations. It's a great place for us to be able to communicate with you and you with us outside of webcasts like this. My handle at Barb Armstrong CS, Cameron's at Cameron May CS, and then you can find us on LinkedIn as well. Just before we get into the thick of things today, just a quick reminder that everything that we discuss here is for information purposes only. None of it to be construed as a recommendation on the part of Schwab or myself in recommending any particular investment strategy or chart pattern or stock. We use the Paper Money software application on the Thinkorswim desktop platform, and it is a brilliant place to learn, to hone our skills, to make sure we understand what we're doing, that we have a trading plan in place, that we know how to place orders on the platform, and the Paper Money is a great place to practice. There are some nuances and differences, and we'll discuss those as we go along as they're appropriate. When we use a stop loss order, there is no guarantee that we're going to get out at the price we've requested. If the stock were to gap down, we, could end up at a lower price than, than what we've requested. And somebody said, that he feels for me. He's had a couple of root canals, and I ended up having a root canal. Yeah, the root canal wasn't so bad. It was the waiting for it, and it was the timing of its appearance. But I guess I should be grateful that it came up before the surgery and not after, or it might have been in a bigger pickle. If you have never been to an in-person event, this was how I got introduced to the world of trading back in 2011 at an in-person event. I'm a huge fan. It was life-changing for me. I've now been a coach here for a decade, but I'd encourage you to check these out. I've made friends. It was a great way for me when I had a crazy house full of teenagers to go somewhere and put my rear end in a seat and just be able to focus on learning uninterrupted. I was intending to be in recovery from the surgery that didn't happen, but I definitely will be in Scottsdale in September and in DC at the beginning of October. So Ben Watson will be at all of these, so it's a chance to get to meet some of your coaches in person also. Oh, we've got some buffering going on. Hopefully that's been resolved. Okay. Okay. Awesome. Okay. So let's get out and start looking at the charts. And I thought we could start with Capital One Financial. And let's go to my example account for this class. So financials have been strong. And how do I know that? Well, one, if we're looking at, should we be looking for bullish examples or bearish examples? If we look at the S&P 500, the SPX, oops, You know, it hit a new, and I'm just going to get rid of these drawings here. It hit a new all-time high last week, and we've got something that you would call like a bull flag, kind of in a stiff wind, perhaps setting up here, but we're within a stone's throw of all-time highs here. When we look at the Dow, it's kind of more of the same. You know, hit a new all-time high last week, setting up a bit of a bull flag by the looks of things, and looking pretty strong. And here, I'll clear these off too. And then when we look at our small caps, you know, are we seeing a theme here? Now, the one that looks the most different is the NASDAQ, where it's, you know, it didn't hit a new all-time high last week, although it did rally significantly. And now we're seeing this bull flag. But, you know, it's in the neighborhood and, you know, up 16, almost 17% year to date. So the market is bullish. And then I've brought up the S&P 500 sector indices. And if we look at financials, well, it hit a new all-time high last week and then pulled back a little and is bouncing off this 10-day moving average, which seems to have been acting as a support level, you know, since the beginning of June. So this has been on quite the upward trajectory. And then that brings us to Capital One Financial. Now, this is a pattern that we've seen, you know, in not only some of the financial stocks, but what we saw happening here was a double bottom pattern, right? So, and sometimes a double bottom can be a trend reversal pattern. And some might say, well, I see this as more of a cup and handle. And you know, so where this would be the cup and this would be the handle. And others might say, well, just move my drag tool over here. I'm going to just be a little more generalist. But the way we would measure is going to be the same. So if we said we have a range here of about $35 from about 176 to about 212, 211. So call it a 35-ish, because support and resistance are not finite numbers, they're ranges. Now, in our trading a smaller account, we looked at this and we said, you know, we're kind of in the moving business, not the storage business. We were looking to do a short-term trade. And given that we were trying to do a short-term trade, let me just close this. We said, and we placed this trade yesterday. So what we saw when we looked at this yesterday was this candle pattern called a bullish harami, where this candle is totally engulfing the candle of the previous day. And that is considered to be a complete pattern. And so we said, hey, if we could buy this now at, you know, say it was at 218 or something at the time, and we're going to sell when it gets up to 224. And that could be a legitimate target, and we call that a swing target. Well, what if you wanted to do an income generating strategy? One of the things we could do is say, well, this pattern is about $35 wide. I'm willing to be in this trade a little longer. I'm going to exercise some more patience. And another target, so while this could be, you know, one target, we could also have a target and say, if I took this 211 and I added 235 to it, I could put a target up here at around 246. And so that could be a target also. And so if we said, well, if we put that as our target, where might we put an exit? Well, we might say, well, if I look at this and I say, well, it looks like it came back down to around this level here, around this 216-ish, I could put a stop, say 3% below that. And so if I took that, let's call it 216 times 0.97, I could put my stop at 209.52. And that would also be just below this. But that's based on a number that's 3% below this 216.42. Okay. So I'm just going to refresh my chat because I'm not sure. Okay. Thank you. That wasn't all coming through for me. Okay, so if we look at this, and does this mean that having a swing target isn't legitimate? Well, it is. And you might say, well, that's not very much of a move, but it's, at the time it was maybe $6. And so if you said, well, if I could make $6 on a $218 investment at the time, that's 2.7%. And if you're only intending to be in the trade for a week or so, you might think that that's a legit target, and that might be a legit target for you. So, we can do that. Now, if we back things up and we say, well, if I'm coming out to this and we said we wanted our target to be 246, well, that's underneath this previous high here of 259. And if I come and I just draw a line around here, 246, and you might say, well, I'm going to really start watching because this could be a potential resistance level. So just because I put a target here, and we might say, well, you know what? How about we make our target instead around this 242 level so that we don't get most of the way there and then, it rolls over and pulls back. So how about we make this 242? We'll make this our target. And so that's kind of at this top here, as opposed to going that little bit higher to 246. So this is one of the ways that we can use technical analysis and say, well, one, I'm seeing this pattern, so I'm going to take this piece into account. I'm going to take this pattern and the suggested target that the range provides. And then I'm going to look at where additional levels of support and resistance may exist and maybe, modify my target based on that. And that's what we've done. We've just modified it a little bit. We've taken it from 246 down to 242. And, if we get in at 219 and out at 242, that's over a it's about a $22 gain. Like that's 10%. Yeah. Okay. So somebody's saying, is there a standard deviation or a delta number that signals a swing opportunity? That's a question in the chat. And I'd like your question. One of the things that we can do with standard deviation is if you're saying, well, how long do you think this might take? So we could come out here to the option chain. So the option chain is useful for things other than just options. So we could say, well, if my target is up around 240, so we're on Capital One Financial, if my target is around 240, if I come over here, it says, what's the probability? And this here, I've got this probability of touching and probability of in the money. So what this is saying is by September 18th, 38 days from now, we've got about a 29% chance of it touching based on where the stock is currently trading. Now, it's not taking technical analysis into account. This is just probabilities, based on other markers. And this is saying here, this plus or minus 16, is that the expected range is plus or minus, that this move You've got a 1 standard deviation. Remember 1 standard deviation, the stats class we all had to take in second year university that we were sure we would never use? You know, the 1 standard deviation is this 16.43. So we're outside of that standard deviation in that our target is $22 higher. And so we might have to wait a little longer. Or we might say, here's something else that we're going to take into account. And maybe we, we put an alert in. We could do that to say, does it look like this might not move any further? So that's another thing that we can use, another tool that we can use in our Thinkorswim tool bag, so to speak. Okay, so let's look at Capital One Financial. We have an account that has almost $1 million in it. And if you said, well, I'm cool with having a position of, 5%. So that would be 50,000. Or you might just say, I don't want any one position to be more than 25,000. I mean, you can make it what you want. But so if we said we were going to do 100 shares, under a $25,000 position, that would be 21,000. So we can come anywhere on this line. We are going to right click and we are going to buy custom with an OCO bracket. Now we are going to put our target up here at 242. We are going to put our exit, and when I zoned in here, if we put that, remember we talked about putting our stop at 209.52. So this is going to be 242. And this is going to be 209.52. And we're going to make these good till canceled. And so if you like the system to do the math for you, which I do, it's saying, we plan to sell if it goes up $22.47 or if it comes down $10. And so we're risking $1,000 to potentially make 2,200. And so, if we're doing this as an income-based strategy, this isn't a short-term weekly strategy. It could take a couple of months for it to get there, and it might never get there. But so we're going to put this in our stocks with targets, and this is based on the double bottom pattern, our target. And this is just a note from us to us. So I'm going to hit send, fire in the hole. Now, if you want to see that note and you're saying like, okay, I saw you put the note in, but now that the note is in there, if I want to see it again, where can I see it? Well, one, you can come to your stocks with targets. And we could just add a column here called notes. And so if I add that, sorry, let me move this up. I've got a screen in the way. So now if I click on this Capital One Financial, it will bring up the note. Now, if you like to keep this as clean as you can, you might say, okay, let's come over to the monitor tab and look at my working orders. And you can see I'm a note kind of gal. So these little things here are notes. We can click on it here and see our note there as well. Okay. Okay, so that's one way to choose a target. And we've done one example. Let's look at another example here. So let's look at GE. So this is GE Aerospace. And, this was it was in a period of consolidation. Like it was kind of trading in a range for months and months, wasn't it? Like if we make this a 1 year. So it kind of like all the way back here, it was still trading in this range between 271 and 340. And then it broke out, it came back to retest and it moved again. And we see this kind of bull flag pattern setting up. And then today we have a hammer pattern or a doji pattern. This is also a harami, meaning the body of today's candle is totally inside the body of yesterday's candle. And that's a tradable pattern. Now, a doji or an inverted hammer, technically we want to see confirmation. So if we wanted to err on the side of caution, we could wait and say, I want to see this go up. Now, what else could we do? We could say, well, this looks like it might be interesting. And, maybe we just do a short-term trade and say, when it gets back up to the previous high, I'd like to exit the position. So we could, make our target based on a swing target. So we could do that. Now we might say, well, we had earnings a short time ago. We might also want to come out and see what kind of news there is and say, like, our when we look at what analysts are doing, are they raising their price targets or lowering them? So here we have this bank that's raised their price target to 450 from 442. It's like our swing target would be 389, right? Bernstein adjusted their price target to 421, Argus to 395. It's interesting, isn't it, how they're kind of all over the place. JP Morgan to 400, Rothschild to 390, Goldman Sachs to 410, but they're all adjusting the price target up. JP Morgan went from 335 to 400. That's a pretty big alteration. And so if we look at this and say, okay, well, if I want to do this, where might I put a stop? And again, stops don't guarantee that you're going to get out at the price requested, right? Like we talked about that right at the beginning, but it's a way to try and manage our risk. And so we could say, well, I see this being kind of a support. It came up and hit its head here a few times, or we could even draw it here. And again, support and resistance are ranges, and then it came down here. So it looks like that might hold. Now, if you want to give it more wiggle room, you might come down to here. But then you're saying, well, I'm risking 28 bucks a share. I'm not willing to do that. And I hear you. So you might say, well, today's low, this low, recent low here was 364.84. If we looked at going, say, 3% below that, we multiply it by 0.97, our stop for that might be 353.89. And then our target is going to be this recent high, 388.84. So if we wanted, we could call it 388. And so how much can we make? Well, about $20 a share. Like I'm kind of doing a thumb on that, like, close to that. So if I take 20 divided by 368, you might say, is that even worth it? Well, it's 5%. It's 5.4%. It's not too shabby for a trade we might only be in for a few days if all goes according to plan. If we think this is going to continue uptrending. And so if we look at that and we say, well, are we okay with having a $36,000 position? Well, a $50,000 position would still be only 5% of our account value. So if we're okay with that, we can come in, right click. And so this is a swing trade. And actually the next class up is a class dedicated to swing trading. So a little foreshadowing here. So we're going to make this 388. So previous high. And we're going to make our stop loss on this 353.89. And we're going to make these good till canceled. And again, there's no guarantee that it's going to go up and hit this target, or, if it gapped up, we could make more. And if it gaps down, we could lose more, but we're willing to, risk $1,449 in order to potentially make 1,962 on 100 shares. And if we're saying, well, that's greater than a 1-to-1 risk reward ratio, we're okay with that. We'd put that in our stock with targets. And then we can put in that note to ourselves that this is a swing target. So if you're going back and you're looking at things and you're thinking like, how did I get to that target again? Why didn't I make the target a bigger target? And you could say, well, I wouldn't mind having a bigger position. So I'm going to do, one exit. I'm going to sell 50 shares when it gets up to 388. And then I'm going to base, my pattern on, something. I'm going to base my second target on something else. And you could do that too. You don't have to sell everything at the same price. But just to show you a different example. So we have one that's a swing target now, one that was a target based on a price pattern. So let's come and look at, let's move over to the world of pizza. Is anybody ready for lunch? A little late for lunch? Yeah, and Sam said that he thinks that GE is back ordered 3 years. So, they have 3 years worth of demand in the pipeline. Like that is pretty huge. That's a lot of pent up demand, right? So if we look at Domino's, now Domino's has been on the struggle bus, haven't they? And they're down 14% year to date. So we're looking at, this would be quite the fun tobogganing hill, right? Or sledding hill. Said she who's living in 100-degree heat right now. Not doing a lot of sledding. But what we saw happen was, and you might say, well, why did you draw your line there? And I think that the way that this line, I drew this line and then just duplicated it because, let me get rid of this. Some might say, well, I would have drawn my line more like this. But however you draw your line, we're going to come up with a diagonal resistance breakout, right? And so we have this diagonal resistance breakout. It came back and now it's moving to the upside. So we're seeing this series of, bull flags, or a series of at least, let me just bring out my drawing tool, higher highs and higher lows. This is kind of maybe similar. So if we looked at this and could we do a swing target? Well, we could. And where would that put us? So a swing target, we might say, well, this high here was the high of that day was 372. So we could make that our target. So if we had a swing target, so 372.16 was the high. We have this, a bit of it's like a morning star pattern where you have a down day, then it gaps down. And then when it rallies on the third day, the bigger this candle, the more bullish it is. And you want it to come at least halfway through this day's candle. Now, this isn't a picture perfect morning star, but it is a relatively bullish configuration. But could we also, I have one ATR down here on the chart. And if you don't have it on your chart and you want to add it, you just come to edit studies and we type in ATR. If you want a detailed description, you can click on this little question mark. But what ATR basically tells us is how much this stock has moved on an average day from the high of the low to the low of the day. What has the range been over the last 14 days. And it has on average moved $12.47. So if I said, okay, well, we're currently at the high of the day, we're at 360.62. Let's add $12 and 53 cents to that. Now, when I first looked at this morning, it was at 12.39 and the stock was trading at 358. So our target would have been 370.85. Well, now if we look at it, our high, we're at 360.59. And we would add 1253, so that's 750, 773, 12. Or sorry, 373.12. So it's actually very close, isn't it, to the swing trade? You know, and it doesn't always, you know, work out that way. But, you know, in this case, it's very close to the swing target. But if we just wanted to do a different example and say, let's do this one based on the average true range. So Mary Burns is saying, like, hasn't this been on the struggle bus for a while? And it has. But, you know, sometimes companies do change their stars and start to turn around. And then you're going like, oh, I wish I'd gotten into it when it was way down here. And when did we see this change happening? And you know, we're not marrying this stock. When we do, you know, a 1 ATR target, like this is a dating strategy. It's like, let's go out for dinner. We'll see how it goes. If it all works out well, like maybe we do it again. Maybe not. Yeah. Yeah. So we're just, yes, this has been downtrending, but sometimes things will downtrend for quite a while and then start to turn around. So yeah, if everybody could help us out by ordering Domino's tonight. Yeah, no, that is not a recommendation. But you know, like we saw Microsoft here, you know, this was downtrending and then set up this bottoming pattern and is now, you know, it would appear that it's starting to turn around. So, you know, this is just, like I said, this is an example, but I like the way you're thinking. Yeah. And so if we just look at this and we say, okay, 1 ATR, and just to make things simple, we're just going to do 100 shares. We're going to add that $12.39, sorry, 12.53. And again, if you're saying, is this worth it? Well, so these guys raising price targets, they downgraded it from hold to buy, and these guys moved their price target down. But they moved it to 353, which is what these guys moved it up to, which is interesting, right? 350, 375, 415. Interesting. Okay. So I actually came over here for the calculator. So we're going to come to our calculator and say, if we could make $12.53 divided by our price to get in is 360.89, that's 3.4%. Okay. So 12.53 divided by 360.87. Let me make sure I've got my decimal points. Yeah, like 3.5%, which, you know, we might be in this for only a day or two. And then with an ATR trade, we might say, okay, so our stop, we're going to take today's low, which is 344.38, and we're going to subtract 12.53. So if it goes 12 bucks below that, we're out. 344.38 minus 12.53. So 331.85. Okay, so we're going to come to our trade tab. We are going to right click. And how much has this moved up today? $13. Isn't that interesting? Good till canceled. Good till canceled. Our target is going to be 373.12. And our exit is going to be 331.85. Confirm and send. And our target, and now this one we're risking more. And why is that? It's because we're adding our target to the high of the day and we're subtracting based on the low of the day. So we're risking more than twice as much. And so some people might just say, I'm not willing to place that trade. And that would be a legit concern. It depends on your degree of confidence in the momentum of the stock. So 1 ATR, that's our 1 ATR target. Okay, so we do not have a ton of time left, but there were a couple of other stocks that were in ranges, and I don't know why we've seemed to find more stocks in ranges. But if we look at GM, remember when we looked at, like if we look at, say, PayPal, which I posted on X today, sorry. So we had something that was downtrending, and then we had this pattern of consolidation, this double bottom, and now it's broken up to the upside. With GM, it was uptrending. Like if we come out to a 1 year, it was uptrending and then went through this period of consolidation, creating this double bottom pattern. And now it's broken out to the upside. So these patterns of consolidation are sometimes part of a consolidation pattern. And so could we kind of do another one of these ranges where we're saying, okay, this is about a $13 range. Could I add 85, add 13, and put a target here around 98? And we could. And so if we wanted to do, this is, a similar thing, except that this is trend continuation. And so our target is going to be at 98. And our exit on that, if we just say, well, if we're looking at this as being a support level, if we put it 3% below that, we'd make this exit about 83.40. And we're going to make that good till canceled. And I'm just doing 100 shares of each of these, although, to be consistent with this one, we'd probably do, a couple of 100 shares. Okay. So, we're risking $6.10. Again, no guarantee if it gapped down that we might not lose more, to make $8.50. And there's no guarantee it's going to go up and hit 98 either. So we've got 4 stocks with targets, and this is based on the double bottom pattern, our consolidation pattern. So we've done 4 example trades today. So we did one on GM based, and our target was based on the range. We did one on Domino's Pizza, DPZ, with a 1 ATR target. We did one on GE that was based on a swing target. And then Capital One Financial, which we started with, was based on a range also. So guys, that's a wrap for today. I hope that you have found this helpful. Yeah, I'm just having one last look at the chat. It looks like there was not a survey today. I'm just having a quick look again. But Let me just see. I'm having, for some reason, not all my chat seems to be coming through, but I appreciate you joining us today. If you'd hit the like button, it helps move this up in the algorithm so that more people can find this content on YouTube. So thank you in advance for that. As I like to say, it's your opportunity to do a favor for a random stranger whom you may never meet. This will be available on replay in the archives. And for the archives, you're going to want to subscribe to the channel. So thank you for giving me the opportunity for that commercial. So you'll want to come to Trader Talks from Schwab Coaching on YouTube. And when you come here, what you'll first see is whatever's being taught. If you come down to playlists, and then trading, getting started with technical analysis is right at the bottom with all the other getting started classes. And so getting started with technical analysis, James Boyd filled in for me last week. And this is where you'll find it in the archives. So thanks to Cameron for his help in the chat, for the people behind the scenes for bringing this class to life, and to all of you for continuing to show up. Thank you. Thank you. Stay tuned. Swing Trading with Mike Fairborn is up next. Have a great day, everyone. We'll see you Friday. Actually, you'll see me tomorrow. I'm filling in for Brent Moores with managing an options portfolio. I'll see you then.